Dear brothers and sisters, I welcome you all to hear and see this video message. In this video, I am going to explain why public sector banks under laws in India. This article I wrote on 25th April 2021 and sent the suggestion to our union government through citizens portal mygovernment.in. Content for this video I given in the description. You can go through and study. Government says that some of the public sector banks are in losses and hence government can no longer take care of them. The fact is that all public sector banks are earning operating profits. Because of provisions for bad loans, some of the banks are in net loss. Operating profits for public sector banks from 2015 to 16 to 2019 to 20 on these 5 years was 7.7 lakhs crores. But due to bad debts calculated as rupees 9.8 lakh crores, public sector banks consider us running on losses of rupees 2 lakhs crores. In these bad debts mostly issued to corporates. So the priority is to take tough action on defaulters and recover the loans. But government is encouraging more write-offs and concession to corporate defaulters. Instead of taking action on these defaulters and recover the bad loans, the attempt is to privatize and hand over the banks with public money to the big corporate houses. Only major ill confronting our public sector banks today is the alarming of huge bad loans. From 2001 to 2020, public sector banks have written off bad loans to the tune of rupees 6,94,037 crores. Main people behind these bad loans are the corporate delinquents and willful defaulters and corrupt higher banking officials, mostly from upper caste that I believe, and political affiliated and biased bank officials and the politicians. I strongly believe without the hands-on gloves of corrupt bank officials, these non-performing assets and bad debt won't come. This should be eradicated in India. Public sector banks should play a catalytic role in the economic development of our country. In the financial year of 2019, from March 2019, September 2019, rupees 96,000 crores of fraud happened by 5,743 incidents in public sector banks. Reserve Bank of India report shows every year 15% of fraud is increasing in India in banks. This is mostly due to nexus of top bank officials with fraud people, those lobby with politicians. To reduce this forgery, bank officials should severely punished. Demonetization in India failed to this fraud people only. Without bank management, higher bank officials, directors and auditors support the fraud, non-banking assets, non-performance asset not possible in Indian banking system. For example, in PMC, that is Punjab Maharashtra Cooperative Bank, 74% of bank amount is given to one institution, that is HDIL, which is defaulted. Later the amount was rupees 6,300 crores. To curb this practice, Government of India should seize the official properties and made death sentence to the fraud people. On 2018 and 19, the bank fraud amount increased up to rupees 71,500 by 6,800 incidents on BJP era, from rupees 10,170 crores by 4,306 incidents on 2013 to 14 on Congress era by 7 times higher. Bank fraud in India increases by 28% in total numbers and 159% in value in financial year 2020 compared to the previous year 2019. The fraud in 2020 were largely related to loans disbursed by public sector banks. Loan frauds accounted for more than 98% of the total amount defrauded in financial year 2020. RBI noticed that concentration of large value frauds in financial year 2020 as the top 50 loan related fraud constitute 76% of the total defrauded amount. Loan frauds include mortgage assets being compromised or divested of, forged documents, available funds diverted or siphoned off, or letter of credits or guarantees misused. Banks takes years to report frauds due to poor implementation of early warning systems. On an average, it takes 24 months for a fraud to be detected from its date of occurrence. Bigger fraud, more than rupees 100 crores, it took 63 months on average to get detected in financial year 2020. As on 2019, 36 crore buddies those got the bigger loan amount in public sector banks, jeopardizing the banks and left India. Willful defaulters should come under the punishment by criminal act. In India, corporate industrialists, those nexus with politicians not have the desire to repay their due loans and that amount going to not performing assets. Kingfisher and Bhushan Steel companies get the loan this way. Banks cannot run on political and bureaucratic directives. Bank management, board members in all public sector banks backed with political favoritism and hardly any possess professional expertise. The annual growth rate of real agricultural credit rose from about 2% in the 90s to about 18% between 2001 to 2015. Much of this new provision of agricultural credit actually did not go to farmers. It largely went to big agricultural business firms and corporate houses located in urban and metropolitan centers but recorded in the bank book as agriculture credits. As per the report of NAFARD Bank, staff involvement with or without collusion from the customer was a common feature in as much as 92% of fraud in banks. Laxity in following the systems and procedures, delay in inter-branch reconciliation and other loopholes were also reported as other reason for our fraud in NABARD Bank. Fraud monitoring mechanisms should be strengthened in all banks in India. All banks in India should comply with the fraud monitoring guidelines and to frame the internal policies for fraud risk management and investigation conduct for annual review of fraud. Delays in conducting concurrent audits, internal inspection and prescribed stock audits and legal audits, poor compliance with audit and inspection observation and non-rotation of staff ultimately weakened the internal checks and controls. This led to occurrence of fraud and delay in detection of fraud. Bible talks about public sector bank losses and their recoveries. In 1 Corinthians chapter 6 verse 8, nay, ye that is corporate and fraud hire bank officials and politicians do wrong and defraud and that your brethren that public sector banks. Also in Psalms chapter 37 verse 21, evil men that is corporate fraudsters borrow and cannot pay it back, but the good man that is peasant man returns what he owes with some extra besides. Also in Ezra chapter 4 verse 22, and take care not to be slack in this by corporate frauds matter. Why should damage grow to the cut of the king, that is exchequer of government of India? Also in Esther chapter 7 verse 4, for I, that is public sector banks, and my people have been sold to those who, that is corporate fraud, will destroy us. We, that is public sector banks, are doomed to destruction and slaughter. If we were only to be sold as slave, perhaps I could remain quiet, though even then there would be incalculable damage to the king that no amount of money, that is bad debt, write-off and NPA could begin to cover. Also in Daniel chapter 6 verse 2, and over them 3 higher officials, that is fraud monitoring prevention methodology, of whom Daniel was one, to whom these satraps should give account, so that the king, that is public sector banks, might suffer no loss. Amen.